Hello, we're going to now talk about the events that occurred between 30 and 60 days ago and what we're going to see perhaps in the future relative to the economy. Let's start first of all with the student loan forbearance program that was announced by President Biden. The forbearance program itself is going to stay in effect until June 30th, 2023. It cost the American taxpayer about $10 billion per month. I believe it's unconstitutional. Everything I've seen states it's unconstitutional, but we should know from the Supreme Court before then. We do have some severe housing problems, and I have to stress the housing market is extremely volatile because of rising interest rates, which we'll talk about in a minute, and the potential of unemployment and people not being able to qualify for housing. Prices are dropping, interest rates are rising, and the housing prices have been dropping steadily for the last 5 months. According to Redfin, who is one of the top, they are actually the top online provider of brokerage, of real estate investment, brokerage. They say that there will be a 16% decline in 2023 related to housing. So that's something to be aware of. Let's talk about energy, the Strategic Petroleum Reserve, and let's talk about oil for a moment. The Strategic Petroleum Reserve is about 40% full. Under the president prior to President Biden, the oil was bought for about $40-something per barrel. We sold the oil for $70 per barrel. So we made a profit on it, and the oil, the SPR is extremely low right now. We have become from being a net exporter to a net importer. Please make sure you understand we're net. That's after oil has been sent back and forth and imported. They polled, there was a poll done for U.S. business leaders to talk about how they feel about the future. And what they feel are the problems coming down the line. 58% of them think that political unrest throughout the world is going to be a problem in 2023. 44% are talking about the lack of raw materials being a problem for the economy. Fuel costs is 40%. And inflation is only 31%, as far as the business people are concerned, for us to be concerned with. There's a crypto crash. I'm sure you've all heard about Sam Bankman. It's really hurt the crypto market. It's gotten to the point that people are throwing the baby out with the bathwater. I guess what I'm saying is there are still a lot of good assets in crypto, but you have to look for them. It's sort of the dot-com era when MySpace, AOL, and Netscape disappeared, but you had Apple and Amazon replace them. The unemployment rate is 3.7. It's stubborn, but it's starting to go up, which might make the Federal Reserve begin to taper back on the rates. Inflation has been, I'm going to go through a couple of months. November 2020, inflation was 1.17. In December of 2021, just to give you an idea, about a year afterwards, inflation was at 7.04. The last indication of inflation we have was in November 2021, and that was 7.1. It's starting to come down a little bit. Now, technically, we're in recession, although they're saying that the fact that unemployment is high, we can't be in recession. But the technical definition of recession is 2 consecutive quarters of gross domestic product decreasing. I'll go through that, gross domestic product, in another video. Let's talk about interest rates. They've been steadily climbing. The last rate that I have, which is the federal funds rate, which is the rate that the best customers get, not you and I, banks to banks, when they lend money to themselves, is 3.78 in November. What that creates is when interest rates go up, what happens is the government begins to compete against business for dollars also. It's sort of a crowding out effect that occurs. There's an indicator that the economists use called PMI, the Purchase Managers Index. Let me explain to you what that is. What they do is they go out and poll all the people who are going to buy things 6 months in advance, and they ask them, do they expect backlogs? How is the oversupply? Is sales going to go up? Are you going to be hiring people? Inventories, to get an idea on what the future looks in terms of purchasing people. Stock market has been steadily down. To move to the future, we are in the middle, in my impression, of a perfect storm of badness. Drop in, or as far as the gross domestic product dropping, the Federal Reserve continuing to run rates higher, which means there's less money out there in the economy. There are supply chain issues. There's a lack of truckers, and we just passed the budget for next year, and that's $1.7 trillion, which is just to make it to the next budget year. Of course, we have the Ukraine war, Russian war going on, and China coming back online. I'd like to thank you for your time. Please give me a thumbs up, give me a like, and I'll see you next time. Bye.